My dear students, welcome back to our channel. In this video, I will be explaining the Bachelor of Commerce 6th semester subject theory and practice of GST as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 5. The important short question is 1. ERP. ERP, Enterprise Resource Planning, is a software system that helps businesses manage their daily activities like billing, accounting, inventory, sales, and GST all in one place. It works like a smart assistant for businesses. Under GST, ERP systems like Tally ERP.9, SAP, or Zoho Books help in generating GST invoices, calculating CGST, SGST, and IGST automatically, filing GST returns, GSTR1, GSTR3B, etc., managing input tax credit, ITC, properly, keeping real-time records of sales and purchases. Example: a business sells goods worth 1 lakh rupees in Karnataka. ERP software calculates and adds 18% GST, 18,000 rupees, generates the invoice, updates the stock, and records the sale instantly. Easy to use, time-saving, and reduces errors. Remember this trick. Easy. Recording of purchases, sales, GST all in one. ERP makes GST compliance simple and stress-free for every Indian business. Next important short question is 2. Describe reverse charge. Reverse charge under GST means the buyer pays the tax instead of the seller. Normally, the seller collects GST and pays it to the government. But in reverse charge, it's the buyer who pays GST directly. When does reverse charge apply? 1. When buying goods, services from an unregistered dealer. 2. On specific goods, services notified by the government. 3. On import of services. Example: Mr. Arjun, a registered businessman in India, hires a transport service from a small truck operator who is not registered under GST. Here, Arjun must pay GST on the transport charges under reverse charge. Easy trick to remember. Reverse means the tax route is reversed, buyer pays instead of seller. Reverse charge ensures the government still gets tax even when the seller is unregistered. Businesses must also mention it in their GST returns. Always check if reverse charge applies to your purchase to stay GST compliant. Next important short question is 3. Input tax credit. Input tax credit, ITC, means getting back the tax you paid on your purchases. Simple meaning: when a business buys goods or services and pays GST, it can reduce that tax amount from its GST payable on sales. This is called input tax credit. Example: suppose Ria runs a clothing store. She buys fabric and pays 1,000 rupees as GST. She sells clothes and collects 1,500 rupees as GST from customers. Now, she will pay only 500 rupee to the government, 1,500 rupee minus 1,000 rupees. This 1,000 rupees is her input tax credit. Easy trick to remember. Input GST paid is equal to credit to reduce output GST payable. Conditions to claim ITC. Must have a tax invoice. Supplier must have paid GST. Goods services must be used for business. Return must be filed properly. ITC helps avoid double taxation and makes GST fair and simple for businesses. Next important short question is 4. What is GST? GST stands for Goods and Services Tax Identification Number. It is like an Aadhaar number for businesses under GST. What is it? GST is a 15-digit unique number given to every registered business under GST. It helps the government track GST payments and filings. Example. Let's say Arun owns a mobile shop in Bengaluru. After registering under GST, he gets a GST like this. 29 Abside 1234 F1Z5. 29 Karnataka State Code. Abside 1234 F PAN of Arun's business. 1 entity number under this PAN. Z default letter. 5 check digit, system generated. Why is it important? Needed to collect GST legally. Required to claim input tax credit, ITC. Used in GST returns, invoices, and bills. Easy trick to remember. GST is equal to business's GST identity number. Every business must display its GST on signboards and invoices. Next important short question is 5. What are e-ledgers? E-ledgers under GST are electronic passbooks for taxpayers maintained on the GST portal. Just like a bank passbook shows your deposits and withdrawals, e-ledgers show your GST credits, liabilities, and payments. Types of e-ledgers. 1. Electronic cash ledger shows the money you deposit for GST payments. 2. Electronic credit ledger shows your input tax credit, ITC, available to use. 3. Electronic liability ledger shows your tax due or payable. Example. Let's say Ravi runs a garments business. He pays 5,000 rupees as GST in his cash ledger and has 10,000 rupee ITC in his credit ledger. His tax due is 12,000 rupees. He can use 10,000 rupees from credit ledger, 2,000 rupees from cash ledger. Then, his liability ledger becomes 0. Easy tip to remember. Cash ledger is equal to wallet. Credit ledger is equal to coupons ITC. Liability ledger is equal to dues to pay. E-ledgers help businesses easily track and manage GST payments online. Next important short question is 6. GST Council. GST Council is like the main decision-making body for GST in India. It is responsible for making rules, fixing tax rates, and solving issues related to GST. Who is in the GST Council? Chairperson, Union Finance Minister. Members, Finance Ministers of all states and Union territories. They meet regularly to discuss and take decisions that are best for the whole country. Example. If the government wants to reduce GST on clothes from 12% to 5%, the GST Council will meet, discuss, and decide whether the change is good for the economy and the people. Easy tip to remember. Think of the GST Council as the Parliament of GST, where all states and the central government come together to make decisions. Without the GST Council, there would be confusion, as every state could have different rules. So, the Council keeps GST smooth and uniform across India. Next important short question is 7. GST Duty Registers. GST duty registers are records or logs maintained by businesses to keep track of all their GST-related duties and payments. These registers help in monitoring how much GST is collected, paid, or payable. What is included in GST duty registers? 1. Input GST register keeps record of GST paid on purchases, input tax credit. 2. Output GST register shows GST collected on sales. 3. GST payment register shows the GST already paid to the government. 4. Return register, tracks GST returns filed monthly quarterly. Example. If a business sells goods and collects 5,000 rupees as GST from customers and pays 3,000 rupees as GST on purchases, these will be entered in the output and input GST registers. These records help in calculating how much tax is to be paid after adjustments. Easy tip to remember. Think of GST duty registers as your GST diary that keeps a clean record of your tax life, what you owe, what you paid, and what you can claim back. Next, Unit 5 Important Long Questions. First important long question is: 1. Explain the process of recording partial payment to suppliers to GST. Recording partial payment to suppliers under GST. When a business buys goods or services from a supplier and does not pay the full amount immediately, it is called partial payment. This is common in business and needs to be recorded properly to ensure correct GST accounting and input tax credit (ITC) eligibility. Step-by-step process. 1. Create a purchase voucher. Enter the full invoice amount and GST details. Mention the supplier's name, invoice date, items purchased, GST rate, and amount. Example, you buy goods worth 10,000 rupees plus 18% GST is equal to 11,800 rupees. 2. Record partial payment using payment voucher. Go to payment entry. Select the supplier's name. Enter the amount you are paying, say 5,000 rupees. Link this payment to the pending purchase invoice. 3. Balance amount is carried forward. The remaining 6,800 rupees is shown as payable in your books until it's paid. 4. GST impact. As per GST rules, input tax credit can only be claimed if payment is made within 180 days of the invoice date. So, if you delay full payment beyond 180 days, ITC must be reversed. Example. Scenario. You purchased office supplies from ABC Traders worth 10,000 rupees plus 1,800 rupees GST is equal to 11,800 rupees. You paid 5,000 rupees now and the rest later. Recording steps in Tally or accounting software. 1. Create purchase voucher for 11,800 rupees with GST details. 2. Create payment voucher for 5,000 rupees. 3. Balance 6,800 rupee remains unpaid. Easy tip to remember. Think of this like buying a phone and paying in EMIs. You still record the full value of the phone, but the EMI payments are recorded step by step. The same happens with suppliers and GST. Always match GST rules with payment dates to safeguard your input tax credit. Next important long question is: 2. Describe the procedure for accounting multiple services in a single supply to GST in Tally ERP.9. Accounting multiple services in a single supply in GST using Tally ERP.9. In real business, sometimes a company provides more than one service in one bill. For example, a digital agency may offer web designing, SEO, and social media marketing in one invoice. Under GST, these must be recorded correctly for proper tax calculation. Tally ERP.9 makes it easy to do this. What is multiple services in a single supply? When a seller provides more than one service together and issues a single invoice, it's called a multiple services in one supply. This is common in service-based businesses. Example. Let's say ABC Services provides the following to a client. Website designing, 20,000 rupees. SEO services, 10,000 rupees. Social media marketing, 15,000 rupees. GST at 18%. Total 45,000 rupees plus 8,100 rupees. GST is equal to 53,100 rupees. Steps to record in Tally ERP.9. Step 1. Enable GST in Tally. Go to F11, Features, Statutory and Taxation. Enable GST, set GST details, state, GSTIN, etc. Step 2. Create ledger accounts. Create service ledgers for each service. Website designing under Sales Accounts. SEO services under Sales Accounts. Social media marketing under Sales Accounts. Assign GST rate 18% for each ledger. Step 3. Create a party ledger. Name, client name under Sundry Debtors. Add GSTIN of client if available. Step 4. Create sales voucher. Go to Accounting Vouchers F8 Sales. Choose Party Ledger, Client. Add each service ledger with the amount. Website designing 20,000 rupees. SEO 10,000 rupees. Social media 15,000 rupees. GST will be auto-calculated at 18% if ledgers are properly configured. Step 5. Save the voucher. Tally will show total GST and net amount. Easy tip to remember. Think of this like ordering a combo meal at a restaurant. You get burger, fries, and drink in one bill. Similarly, in GST, multiple services can be billed together, but each must be listed clearly in your accounting for proper tax tracking. Tally makes it simple. Next important long question is: 3. Explain the concept of advance receipts from customers under GST. Concept of advance receipts from customers under GST. What is an advance receipt under GST? In simple words, advance receipt means when a customer pays money before receiving the goods or services. As per GST rules, if you receive advance payment for goods or services, GST becomes applicable at the time of receipt, not at the time of actual sale. Example to understand. Let's say, a customer orders furniture from you worth 50,000 rupees. He pays 20,000 rupees in advance on 5th April. You deliver the furniture on 25th April. Here, GST should be paid on 20,000 rupees on 5th April itself, when advance is received. Later, GST is paid on the remaining 30,000 rupee when the invoice is raised. Important points. GST is payable on advance received for services and goods. You must issue a receipt voucher when advance is received. Advance received should be recorded properly in books. When actual sale happens, adjust the advance against invoice. Receipt voucher mandatory. When you receive an advance, issue a receipt voucher with the following details: name and address of the customer, date and amount of advance, rate of GST, place of supply, signature of the supplier. How it works in Tally ERP.9 Basic idea. 1. Enable GST in Tally. 2. Create a receipt voucher when advance is received. 3. Mention GST rate and collect tax on advance. 4. Later, create sales invoice and adjust the advance amount. Easy tip to remember. Think of advance receipt like booking movie tickets online. You pay first, advance, and later enjoy the movie service. The same goes in GST, pay tax when money is received, not just when goods are delivered. So, always remember, advance is equal to GST is triggered. Record it properly and stay GST compliant. Next important long question is: 4. Explain the place of supply of services and its determinants. Place of supply of services under GST. What is place of supply of services? In simple terms, place of supply determines where the supply of service is considered to have occurred. It helps in deciding which state or union territory the GST should be paid to. For example, if a service is provided from one state to another, the place of supply will decide whether the SGST, CGST or IGST will apply. Determinants of place of supply. The place of supply for services is determined by the type of service and the location of the recipient where the service is being consumed. There are different rules for different types of services. 1. General rule, location of service receiver. For most services, the place of supply is the location of the recipient. Example, if a consulting service is provided by someone in Delhi to a customer in Mumbai, the place of supply will be Mumbai, where the recipient is. 2. In case of services provided to a business or individual, B2B. If a service is provided to a business, like a company, the place of supply will be where the recipient's business is located. 3. In case of services provided to an individual, B2C. If a service is provided to an individual, like a personal consultation, the place of supply is where the individual is located. 4. Specific rules for certain services. Transportation services. If services involve transportation of goods, the place of supply will be where goods are delivered. Example, transporting goods from Chennai to Pune, the place of supply will be Pune. Restaurant and catering services. The place of supply is where the service is provided, the restaurant's location. Example, a person dines in a restaurant in Delhi. The place of supply is Delhi. Telecommunication services. If the service is related to telecommunication, example, phone services, the place of supply is where the phone number is registered. Example, let's say Mr. A in Delhi buys a consultation service from Mr. B in Kolkata for his business located in Mumbai. Place of supply is equal to Mumbai, where the business is located. Electric light bulb key takeaways. The place of supply determines where the GST will be paid. It depends on who the service is provided to and where they are located. Always check the specific service rules to ensure the right place is identified. In short, the place of supply helps determine the jurisdiction and type of GST, SGST, CGST, or IGST. It's a crucial aspect of GST compliance. Next important long question is 5. Write a note on exempt supply of services under GST with some examples. V.imp. Exempt supply of services under GST. What is exempt supply under GST? Exempt supply refers to the goods and services that are not subject to GST. In simple words, these are services on which GST is not levied. Businesses providing exempt services do not charge GST on them, nor do they need to pay tax on their purchases related to such services. Exempt services under GST. Under the GST law, certain services are exempt from tax to provide relief to sectors that have minimal tax impact or are essential for public welfare. Examples of exempt supply of services. 1. Healthcare services. Example, services provided by hospitals, doctors, and medical professionals, such as consultation, surgeries, etc., are exempt. Why? Healthcare is an essential service that should be easily accessible to the public without any additional tax burden. 2. Educational services. Example, services provided by educational institutions, like schools, colleges, coaching centers, for the purpose of imparting education are exempt. Why? Education is a fundamental right and essential for the development of society. 3. Transportation of passengers. Example, services like public transport, railways, metro, or air transport for passengers are exempt from GST in many cases. Why? Transportation is critical for mobility, and exemption makes it affordable for people. 4. Services provided by government or local authority. Example, services like public administration, water supply, sewage, etc., provided by the government or local authority are exempt. Why? These services are usually essential for the welfare of citizens, and charging GST would increase the cost burden. 5. Services related to agriculture. Example, services like crop spraying, agricultural consulting, and farming-related services are exempt. Why? Agriculture is a vital sector in India, and exemptions help to promote the livelihood of farmers. 6. Charitable and religious services. Example, services offered by charitable organizations and religious places, like temples, churches, mosques, are exempt. Why? These services serve the public interest and need to be supported without taxes. Important points to remember. Exemption doesn't mean zero-rated. Exempt supplies are not taxable, but businesses can't claim input tax credit on such supplies. Essential services like healthcare, education, and public transport are usually exempt to ensure they are affordable for everyone. Conclusion. Exempt supplies under GST help make critical services more affordable and accessible to the public. However, businesses providing these services should be aware that they cannot claim input tax credits on their purchases related to exempt services. By keeping track of these exemptions, businesses can stay GST compliant and ensure they aren't wrongly charged taxes. I hope you understand easily each question. All the best, students, for your upcoming exam. For other subject quick revision. Important questions. Previous question papers. And syllabus. Links are available in description. Check out once. Thank you for watching. Like and share this video with your friends.